Okay, sorry for the interruption. So, I'm gonna start again from my 15 minutes time frame. I'm gonna start again from my 15 minutes time frame. So, prior to how I make my analysis, okay, hold on. Let me go back to my 1 day. This is like So on my 1 day, I need to know my trend. I need to know my trend. So for me to be able to know my trend on 1 day, I need to know my cycle. I mark out my cycle. Here's my cycle. This is my cycle. So basically, this market is in an uptrend on my 1 day. So I need to know, oh, this is my cycle. So now I go down to the lower time frame, like my 15 minutes. I'm done with my 1 day because this is not anywhere near my support or resistance. It's just in between. So, but this market is in uptrend. So I'll need to look for either long or short opportunity depending on what the lower time frame is giving me. So this is my lower time frame. So this is my lower time frame. I need to mark out my. Oh, sorry, I'm not showing my. Sorry, hold on. Okay, sorry, I need to start afresh. So this is my higher time frame, my 1 day. So on my 1 day, I marked out my cycle on my 1 day, and my uptrend starts from here, and this is the current market price. So this market is in an uptrend, and basically there is no support or resistance. This price is just in between last resistance and last support on the higher time frame. So I'm going to my lower time frame to know what I'm doing from my lower time frame. Am I longing or shorting? My lower time frame will tell me. So on my lower time frame, I need to mark out my cycle as well on my lower time frame. So my cycle, I can pick any cycle I want, any of my choice. It's still going to give me the same thing. If I'm picking this or picking this, it's still going to give me the same thing. So this is the cycle I picked from here to here to here to here, and this is my last market price. This is my last market price. So I need to draw my trend. Since this is my last market price, I need to draw my trend. I draw my trend because this market is still in an uptrend. Unless it touches this area, then it goes back to a downtrend. So you draw your cycle, your chart, your trend. You draw your trend by joining the last two swing in the area of support. So this is how you draw your trend. You make sure that it's touching the support one, touch the resistance, touch the support again, and touch the resistance. And here is a breakout of your trend. So that's the essence. You use this the your parallel chart so you know where there is a breakout. So this is a breakout of your trend. When a breakout of your trend happens, your a pattern start forming. So outside a market trend, the rest forming here is a pattern. That is how you trade them. So how do you know if a pattern is forming? So from this, after the breakout of this breakout candle, the next candle, a chart pattern start forming. So you start drawing the pattern from the next candle after the breakout. Leave this breakout candle, start from this to this place. So this is it. Now, what pattern is this? What pattern is this? What pattern is this? So use your paths from the origin of the pattern here, this place, or this place, and this place. So now this pattern is breaking out here. Pattern most times they have three swings. Most patterns have three swing aside double top and double bottom. Those are the patterns that uses two swings to form, but every other pattern forms with three swings. So when you're marking your pattern, you should make sure that your pattern forms three swings. So and when you're drawing your patterns, don't make a mistake of because when you look, this is like one swing going up and retracing to here, and another swing like this. So if this pattern is, make sure this touches this support and this. So assuming you're drawing this and maybe you start doing this, don't do this when you're drawing your pattern. Draw it from the end of the swings. So don't go in between. Make sure this end of the swing meets this end, in the sense that if this is a pattern, you're drawing this to this. Don't do this. So you know when a perfect pattern is forming. So, and again, this looks like a reversal pattern. Okay, you first determine the cycle. The essence of determining the cycle is for you to know where your trends, where to start drawing your trend. That's the essence of you determining your cycle. So after you determine your cycle, you then draw your trend. Then after drawing your trend, from the breakout of the trend, a chart pattern starts forming. A chart pattern starts forming. Now, the chart patterns that start forming, this is the pattern that formed at this point. So at this moment, on this pattern forming, then how do you know where a breakout of a pattern is likely to be? How you know where a breakout of the pattern is likely to be? Pattern has 3 swing up and 3 swing down. From the origin, this is this to a swing up, a swing down, a swing up, a swing down. On my support of a pattern, this support, I'm already having 3 touches. So the breakout is going to be on the upper side, which is the resistance. So that's where you know where your breakout is of a chart pattern starts, where the breakout happens. So this looks like a wedge. Sometimes wedges are very this is what I mean. Sometimes wedges are always confusing. This might look like a wedge, but wedge can be a continuation pattern or a reversal pattern. So if this is a wedge, if I have this movement here, 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 this is going to break out this way. If I have this other wedge, if I have another wedge, if I have another wedge like this, if I have this wedge that starts like this from up, sorry, if I have a wedge like this, down, up, down, up, the breakout is going to be on a downside. So this is a reversal pattern of a wedge. This is a continuation pattern of a wedge. So you know where a chart pattern is likely going to break out. So on this aspect, this breakout happened at this place. How do you measure your target? You measure your target from here to this place. Then this is your target from the point of breakout. So from the point of breakout, this is your target. So when you take this trade, this is your target. Then from this area again, another chart pattern will start forming. From this area again, another chart pattern will start forming. Then you need to look at the swings again of the last chart pattern that formed. So from this exact point this pattern ended, another pattern will start forming. So this is like you're trading this trend like in a continuation pattern. So this is it. So right now I'm done trading this other pattern. So the next pattern that formed is this. So this is it. This is it. This. Even though this broke out here, but this is like one swing. So this completed when it came back inside this place. So this is like this. So this broke down here, and your target is going to be like this. From the breakout point of this pattern. So it means this pattern ended here. Then another pattern will start forming again, which is this pattern stopped here. this is another pattern forming. So that is how you trade this pattern. It's actually very sweet if you could be able to identify your trend. Then you can trade continuation patterns. This pattern, this is like a reversal pattern showing that if this is the end of this uptrend. So the next, yeah, you measure the chart pattern, but chart pattern first, most times you measure the biggest side of the chart pattern. That is how you trade your chart pattern. If you want to read about chart pattern, you can just um these are chart patterns. Let me check. Yeah, one that actually, so you can basically read about your chart pattern. So you know your measurement of chart pattern when this is a reversal pattern and this is a continuation pattern. In essence of measuring you are not measuring the first swing. Sometimes you measure the last swing if this is expanding wedge. You can only measure the first swing if that is wedge like this. But in a wedge like this, you measure the last swing. So you are measuring the mostly the bigger part of a chart pattern. That is what you're measuring, and that is your TP. And once your TP is hit, another pattern will start forming immediately. So at this point, this is another pattern forming. This is another pattern forming. So now look, it's this is a bit confusing. When the pattern is not straight, you just leave it. So this is it. This is this. This is the second swing. This is the third swing. This is the fourth swing. So okay, this is the third swing. So this is actually likely going to break out upwards the way the pattern here formed. But when you see that this break out downwards and starts going down, so you can decide not to trade this because this might come back and continue for these breakouts that happen here to take an effect. So when your pattern is not giving you like assuming you took this trade on this place, if you took this trade, so although there is a way to avoid this kind of breakout, when you took in this area, look at this. This was supposed to be a continuation pattern, but look at this support. There was no breakout here, but on this swing there was a breakout that happened here. So now when this happens, just like here, if the pattern breaks the support or the resistance, so how do you know your invalidation points? First of all, look at this pattern that formed here. This is this, and there was no third leg that formed. The third leg of the swing that formed before this breakout happens. It's telling you that this pattern is not complete yet. Now, as the pattern is not complete yet, it means that what I'm saying is that let me draw this out. Let me draw this out. Now, when a pattern starts from here, here, and here, and there is a breakout here, this pattern is not complete because this is not a double top. It's only double top that uses two swing. But once the shape is not like a double top, you just and a double top is not forming in between a trend. A double top supposed to show the end of the trend, just like this showed a reversal pattern like end of this trend. So you expect continuation pattern to continue forming. So as this is a pattern and there was a breakout here, it means that this pattern is not complete. So once this pattern goes up here and a breakout, there are chances of this pattern coming back to this place again. So that's how you know a pattern that was likely going to have a fake out. Watch this. Once this happened, there was no breakout here. As this happened, this there was no breakout here. Although there is a breakout here, but this is okay because this is the last swing. This is like first swing, second swing, another swing, then at this swing there was a breakout here, fine, because this is going to have a third leg here. But once this happens, it means that this is a breakout and another third leg here, it's likely going to have a fake out as well. So this will actually give you a false signal when a pattern starts forming this way, because the way chart patterns form, it might actually be so big that it's not this consolidation that is the actual pattern. It might be another pattern, but that is why it's not perfect. If this pattern is perfect, it would have given you something to trade here, but there was nothing to trade here. So apparently you are not taking this trade. And assuming you wanted to take this trade, wait for this to happen, mark this place as a support. If this bounces here, this breakout can be valid if this bounces here. But if this goes beyond this place, this breakout will no longer be valid. But if this bounces here, this breakout will be valid, and this is likely going to continue up like this. But once this breakout happens, the breakout here is invalid. So that is it. So because there was a breakout here, a breakout here, and a breakout here, that's why this breakout was not valid. And on this, because a reversal pattern also formed here, another pattern, this likes to go up. So this is likely a reversal pattern forming here, means that this is the end of this trend. Likely this coin is going back to the support of your cycle. So that is what a reversal pattern shows you. But if here is a continuation pattern, it means that this trend will continue. But since this is a reversal pattern, if a breakout is happening, if a chart pattern is happening, it's likely going to tell you that it's going to be bearish chart pattern you're expecting, because a reversal pattern has happened already. Okay, now you can only take a trade if the pattern is complete or it's on the last swing. If it's on the last swing of the pattern, just like if this is happening, but if this reversal is happening, you can take a trade here, because this is a complete reversal pattern. This is not a reversal pattern. This might actually bring confusion. But if it's perfect, like this, you can take a trade here. But if it's not perfect, you can take a trade only on the last swing of a pattern. So this is the last swing of this pattern. You can take a trade here, or you take at the breakout. You can take a trade here, or you take at the breakout. But sometimes a pattern will break out like it did here. It can break out, but it's still valid. Once it comes back here, it goes down again. So you can also use your mini swing change to know when to take a trade. On this area, you're expecting a rejection, either candlestick or your mini swing change. So just like the mini swing change I'm talking about is this higher high, this market's breaking out and going back below this last resistance. You can use this to take your trade if that is a good bearish pattern that is forming, because the resistance ought to be rejecting, not is ought to be rejecting at here. Then you know that this is a good chart pattern. You can either use the chart pattern resistant line or the last swing resistant line to take the trade. Once you know that, oh, this is the chart pattern that is formed. So that's why I said that before you could be able to follow my trading strategy, I pointed out a few things you should be able to pay attention to: your trend, your cycle, your chart pattern, your Fibonacci, your support and resistance. These are the few things you consider when you're taking your trade. So when a reversal pattern forms, it means that the cycle, the trend, it's have ended and you're going back to your support. Now, a trend can be influenced by the higher time frame. That is, the trend of the lower time frame can be influenced on the higher time frame. Yes, so one, if a trend is continuous, you ought to be having a continuous chart pattern like this. If a trend is continuous, you ought to be having this kind of continuation pattern. this is a wedge, this is rectangle, this is a pinner. These are the kind of pattern you'll be getting if that trend is continuous. This is for uptrend, this is for downtrend. But if the trend is not continuous and a reversal pattern start forming, it means that the trend will reverse. So that is it. So now on this gold, when you look at gold on the 1 day and the uptrend is still very, what I mean by the uptrend is still very, let me delete. When you look at gold on the 1 day, gold have not shown any sign of reversal on this 1 day. Now, let's say gold makes this move. Let's say gold forms a double top here. You'll be looking for a reversal of this trend. But watch, gold have never formed a double top on this area. So it means the pattern still looks continuous. This trend looks very continuous because there is no double top that formed on this area, because this trend is still very, this is looking like a parabolic trend. There are some trends that are very bullish. When you look at the angle of the trend, that will tell you if the trend is, if a trend is like this, the trend is going in this way. So if a trend is going in this way, this trend is actually very good to trade. You can trade the support and resistance. But when a trend moves outside and start going up, 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 that trend is likely going to be in a parabolic movement. Like if it continue going up, like gold is doing here, that trend is very, very bullish, and it's actually going to continue going up until a significant reversal pattern form. But look at gold, this trend is still very active and it's still making higher highs and higher highs, and there is no change of okay, where to place a stop loss to avoid fake out. Now that's where you apply your candlestick pattern. When you're taking a pattern trade, at the end of a chart pattern, assuming this is a chart pattern, assuming this is a reversal chart pattern, because reversal are always difficult, and assuming this is a reversal chart pattern, this, how do you avoid this happening? Is the analysis is still correct and it will still come back here because this is a reversal chart, but how do you avoid this thing happening? First of all, look at the candlestick that forms here. At this point, check the candlestick that formed there. If there is a bearish candlestick, then take your trade here and place your stop loss above that bearish candlestick. Then once it goes out, don't worry about the market, just leave it, because it might go up. Then watch the price coming back. If the price is coming back, it's supposed to do something like this: fall inside this resistance and go back up here and reject this resistance before coming down. So this is likely being a guide. If you know your candlestick pattern, if you know your candlestick chart pattern, you take this rejection. If there is a rejection candlestick on this line, you can take this trade again. So that's how you to make your stop losses very, very close, not very wide. Don't take your stop losses very wide, because if a reversal might want to happen, but it will go up before happening. I have a case like that in the last analysis I did, and to you it feels like it's a wrong analysis, but it's not. So it's not a wrong analysis when you're trading a chart pattern, because chart patterns are not always very perfect. So you use your candlestick to set your entries and exits. So once there is a rejection here, you can take that trade, then place your stop loss above their candlestick. A rejection can make sure it's a bearish candlestick. You take your trade, you place your stop loss slightly above the bearish candlestick. Then if that happens, But once a trade is not giving you some valid rejections, like if you want to short, you're supposed to start seeing rejection. If you're not seeing rejection, it means that that market will still come back. So if you're not seeing rejection, it's better you leave the trade. Some trades do not give, they give confused analysis. Once a trade is giving you a confused analysis, you can just leave that trade and focus on the next one. So I don't know if I answered that question correctly. How to avoid fake outs? You can just use your candlestick, a rejection, and you place your stop loss very close. It can take you out of the trade. Then you can still um, go in again if the trade gives you a good rejection. If you're shorting, if you're longing, if there is a good support with a candlestick forming at the support of the pattern, you can actually take the trade. So this cycle pattern actually works very well in every time frame, because I can go down to my 5 minutes time frame now on gold, and now on gold, I'm seeing my pattern. So this is gold. So this is gold. So this is my cycle on gold. So my trend started here. So it's actually very confusing when I'm trying to do this now. So how do I draw my trend to get my pattern? Now, don't do this, don't do this, don't do this. This is the end of this like where the cycle, the trend on the cycle. Then don't do this, don't try to do this. No, this is wrong in drawing your trend. Because look at this swing that went up here to the end of this cycle. It's actually, you can't see the swing from this time frame, from this 5 minutes time frame. This movement that happened here. Look, if this movement happened like this, go into this area on 5 minutes, you can easily draw your trend like this. You can easily draw your trend like this on these 5 minutes. But if let's look at how this trend started. It started like, I think, just like a few like this and like this. You can't draw this trend on this time frame. For you to draw this trend, this is how this trend looks. For you to draw this trend, you need to go down to your lower time frame. Let me say this 5 minutes, so like 1 minute. So this is your 1 minute. So look at the swing I'm having. Right now, this looks so confusing because it's making some movement. It's making some movement. So at this moment, if a pattern is not clear, you can just decide not to trade. Sometimes the trade does not give you a good pattern. You can just decide not to trade. But let's say this is your breakout. This is a breakout candlestick. This is a breakout candlestick. So you start. This is like your chart pattern. The last swing that formed, a visible swing clearly though. So because this pattern is actually it's not clear. Look at this. Look at this. Is another swing. This. And this pattern is not clear. You can decide not to take this trade because this pattern is not clear. Sometimes market gives you a perfect pattern that forms. It's very sweet to trade. But when the patterns are not clear, like this case, you just not trade. You just don't trade. You can just exit this market until you wait for a clear pattern to form. Because what I'm seeing here, I'm not seeing a good swing for me to get my pattern. It's actually very confusing at this moment. So I can decide not to take this trade and wait for another trade. So I don't know if that is clear, because this is analysis on gold. Today I'll also be moving over to crypto. Let me go down to crypto. This is gold. So I'm going to crypto on BTC. So let's see what BTC have for us. It's actually very fun that for days now BTC has been going up, and a lot of people have been panicking. Oh, where is the direction of BTC? What is it doing? This and that and all that. So go to your higher time frame. I start from a higher time frame. This is my higher time frame. This is my higher time frame. I'm trying to get my cycle on my 1 day. I'm trying to get my cycle on my 1 day. Okay, I got it. Now this is my cycle on my 1 day on BTC. So this is my cycle on BTC 1 day. So now for days or weeks since February, January, BTC has been on a downtrend. So this was a downtrend of BTC for months now. And yesterday, BTC moved to an uptrend, completing, touching this resistance of this cycle. So BTC moved to an uptrend. How do you choose your area? You don't choose any area. You can choose any swing. You can choose any swing that you saw that would make a complete cycle. I can decide to choose this swing. I can decide to choose the swing that I have here. Just make sure you have a good swing for you to check your pattern, your cycle. Just picture out. You can go down to my last video on my cycle for you to know how to check your cycle. So this made a complete cycle. Even at here, BTC have entered uptrend. If you're using this other one, if you're using this, if you're using this, if you're using this cycle, so I would identify them by colors. I will change the color to, okay, let me use blue. Okay, I'll use blue to demarcate. Okay, at this moment, there are two cycles here. There are two cycles here. So there are two cycles here. So these two cycle, is it, well, even though you're using this one I marked with green that has the support here and resistance here, it's still gonna give you the same thing. So it means that BTC is in an uptrend here, is in an uptrend here. So how do you know what is forming again? Now BTC, the uptrend started here. Go down to, because this trend, the swing is not clear here, go down to 4 hours. Now this is your 4 hours. This is the last swing of this trend, this swing. So this is it. So look at this. So your trend is completed here. Now there is a breakout that happened here on these 4 hours. You can choose your breakout candle. So right at this moment, this is what BTC is doing. A pattern formed here. Okay. So look, this is a pattern that looks tricky because this is it. Look at the swing, the breakout candle. Look at this. Look at this. Look at this. And look at this. So this is like one swing that'll come down to this place again. Now, mind you, when I say that, if you have a pattern like this is like a continuation pattern. This is like a continuation pattern. And this continuation pattern, we already have a breakout on this on this swing. This. We already have a breakout here. So definitely, if we have a breakout here, these markets will come back to this place, to come back to this support. So the safest area to take Bitcoin trade is this zone, 94,000. And now this is where I apply my breakout and retest. How I apply my area of breakout and retest. When you watch this pattern, there were areas that was not tested when the breakout happened. Area like this, there was a breakout that happened here, and there was no retest. Area like this, there was a breakout that happened here, and there was no retest. Now, once Bitcoin have this area to test, and this pattern will still play out. This pattern will play out. This is second swing. So, but for this to be complete, we can mark this to this. If this breaks out, it's going to take us to this area up. So now, but there is no breakout that happened already. So a breakout can happen, or this will pull back to this zone to take your trade. So this is a chart pattern forming. This chart pattern can be sweet if this is a reversal chart pattern forming immediately. Then it's actually very okay for you to take your trade. But this pattern is a continuation pattern, and this pattern is actually not easy if you've not mastered your chart pattern. So, but for now, this is the pattern forming. So I'm expecting Bitcoin to come down to this area for me to be able to take a safe trade. I can't take this breakout that happened here, because if a breakout happens here, look, when I say that first leg, second leg, third leg, this was supposed to be a reversal, but when you look at it, it's not a reversal chart pattern. This is the origin of this chart pattern. It's not a reversal chart pattern. This origin. So it's likely going to break out at this area. This is the third leg. It's likely going to break out at this area. But for now, there's no breakout happening. And if this breakout happens, this markets will definitely come down to this area. It can actually go to the target straight, but to be on a safer side, this will give you a fake out, because this pattern is not perfect. If this pattern is perfect, this will not give you a fake out. You can actually trade this breakout, but at the moment, this pattern will give you a fake out. So I've said for you to identify a pattern that will give you a fake out and the one that will not give you a fake out. So at the moment, this pattern will definitely give you a fake out. So for you to be on the safer side, look for your areas that was not retested when there was a breakout on this pattern, not on any other area. You can take your trade on the areas that breakout and retest did not happen. You can watch my my breakout and retest video on my previous video. So these are the areas that are left without a retest. This area, look, there was a breakout of resistance here and there was no retest. There was a breakout of resistance here and there was no retest. Even when a retest happened, there was no bounce. There was a breakout and retest at this zone and there was no retest. So these areas are where you would expect to take your trades. This pattern is still active. So I'm expecting Bitcoin to have a pullback down to this area, but Bitcoin should not touch this support of my cycle. If Bitcoin goes beyond this place, that means Bitcoin have gone back to downtrend, but at this area it's still in an uptrend, and this is the pattern forming at the moment. So this is my analysis on Bitcoin. I'm predicting Bitcoin to go to 108, 110, and to like 120 if we are going to maintain this zone without touching the support of the cycle. If we touch the support of the cycle, Bitcoin will go back to downtrend. So at the moment, so let's go to Ethereum. I have Ethereum here. This is my Ethereum. So I would actually delete all this. So on my Ethereum, I need to figure out the trend of my Ethereum. What is the trend of my Ethereum? What is the trend of my Ethereum? So I'm seeing a swing that looks good here. I mean, I'm starting on this swing, marking the support here. You can mark any swing. You can definitely mark any swing at all. So I can mark this, the one that is here, or this one that is here, this one that is here. Okay, now if I'm using this, mind you that this Ethereum is still on the downtrend. Even on this other cycle, Ethereum is still on the downtrend. So that's why you've not been seeing much movement on Ethereum for the past couple of months, even on altcoins, because a lot of them are on downtrend. Bitcoin has been in an uptrend. and it slightly moved to a downtrend and is back uptrend again. But Ethereum have been in a deep downtrend. So this is my Ethereum chart. So this is my downtrend. So it means that my downtrend started here. So I'm going to take this. I'm going to take this. So this is a perfect trend. You've seen that this trend fits in without me needing to adjust anything. So this is a perfect trend. It fitted in without me needing to adjust anything. So this is a perfect trend. So on this perfect trend, that is when you can trade your trend breakout. When you have a perfect trend. So this is another strategy for you to take this cycle of a thing. If your trend is perfect, you can take your breakout. But if your trend is not perfect, do not take the breakout. So if your trend is perfect like this, you can take the breakout. This is likely going to go back up here or this place. So once your trend is perfect. So, but I don't like taking this type of trades because sometimes you might get a pattern forming here without this going direct. But most times the perfect um, trend with parallel channel, when there is a breakout, the market goes up. So you notice there was a breakout that happened around here, and you see Ethereum for the first time in how many months made the move, like the highest move. Look at this whole candlestick. This is the highest candlestick because there was a breakout already that happened on this downtrend. So it means that this downtrend have experienced a first breakout. So this is actually going up. Was the reason Ethereum was pumping. I made this prediction a few weeks. So because when Ethereum was inside here, it's still on a very strong downtrend. But at this moment, so Ethereum moved out of its trend and we saw a pump that happened. So this was a good sign of a trade. You can take when the trend is perfect. But if the trend is not perfect, just like our gold, watch your gold, uh, watch the gold. When I measured out my, what was it? So when I measured out my cycle on gold, watch my trend here is not perfect. So I cannot take this trade. This trend is still up, still very up, and I can't fit in this trend. Look, this trend is very difficult for me to draw. So, but my Ethereum here, look, this trend fitted in perfectly. So I can take the breakout of the trend. So this cycle, it's for you to find out the one that works for you. You can take this trade, you can use your Fibonacci, you can use your this parallel channel for you to know your trend. You can use your chart pattern. So the things you can trade, you can take your chart patterns, you can take your Fibonacci, you can take your trend breakout. So these are the series of angles you can actually take when you start using your cycle. So on this now, if I decided to take this trade of Ethereum, I would have taken a trade here because this is a breakout of your trend. This is a perfect breakout of your trend, and it goes. So if you go down to 4 hours, you would see there. So the time this market crawled out of this zone, see, the market crawled out of here and made a small consolidation, and it's over. Now that is why this trend breakout is actually difficult for you to determine the take profit of a trend breakout. It's actually difficult. So that's why I don't take the trade. Pattern gives me the best take profits. But when you're using Fibonacci, Fibonacci does not give the best take profit, and trend breakout does not give the best take profit. You can equally check other areas on your chart that like a major swing support or a major swing resistance that you can equally determine, or your demand zone or supply zone for. So the target of a trend breakout is actually tricky. It can go back over to the cycle, this cycle resistance, this cycle resistance. So fine, but it's tricky. I can't determine the target of this, but when there is a breakout, you can just take this trade, and your stop loss should be if this falls inside this zone. But at the moment, this went up. So I don't take this type of trade. For me to take this kind of trade, I would need a pattern to form after this breakout. I will need a pattern to form maybe on this zone. I'll need a pattern to form. Then on if this pattern forms, I take the target of this pattern. That would give me a very sure signal than me trying to take the breakout of this uh, trend here. Quite enough. I know it will go up, but any trade I don't master the target, I don't go into it. So this is the support of a cycle on which the price is reacting now. So there are different areas this can react, but it's not determined how you know. So my so far pattern always gives me the most accurate target. So when I get Fibonacci, like measuring the next target and this and that, I don't really like taking Fibonacci that much because the target of Fibonacci is actually it. A Fibonacci might get close to its target and it will reverse. So that's why the perfect of a target of a Fibonacci and a breakout of this trend line is actually quite difficult. So we can just mark an area of a swing support or a swing, any swing support or swing resistance as your next target. So I believe that's quite understandable. So far I've been able to cover my uh, gold and Bitcoin and Ethereum. So at this moment, Ethereum now I don't unless I go to my lower time frame, I could actually take Ethereum trade. But on this higher time frame on Ethereum, I would need some consolidation. Now this is just a straight movement. So for some days to come, I would expect so for for me to take this, I will need some consolidation for me to know the pattern forming at this breakout. So if that's it's all, I'm expecting more question. No, it's not all trades that gives you a pattern, is it? That's why it's not anything that forms in the market. Market activities can just form and without you taking. If you're taking your trades, you should make sure that you determine your exit point and your target. And it's only my pattern that gives me that. If I'm not trading, I can take my profits at along the go. There is nobody that predicts market so perfectly. At some time, you need to go out. So this Ethereum now, if you know your major, if you're dealing about your major swings, and Ethereum has a strong resistance on this zone. Ethereum has a resistance on this zone, and watch the price is still on this resistance. There is no breakout that happens. Now price is above it, but the price of the day have not closed. So your initial target can just be this resistance. So in this type of trade, I can't predict the next target of Ethereum. That's why for days I don't make Ethereum predictions. I go with Bitcoin that I actually see a clear pattern of what is forming. So if I'm not seeing any clear pattern of what is forming, I don't take the trade. I just ignore the market. So if that is very clear, I would be expecting more questions because we are likely coming to the towards the end of our class. So so far, if that's the end and there was no more questions, I hope I answered all your questions correctly. We'll be coming to our class. We'll have class tomorrow. We'll be talking on indices. So I'm expecting everyone to join as well. So it's still the same market. It's still the same thing we are doing, just on different markets. How do you avoid your stop loss being hit? You can only avoid your stop loss when you're trading at a strategic plate. If a pattern is forming, you place your stop loss with the respect to the pattern. If you're trading support and resistance, you place your stop loss on the um on the resistance of a support of the resistance or below the support. So or you use your mini swing. On this point, this market is still in a very good trend. So if your mini swing starts changing, you can use that as a guide. These are ways you, if mini swing starts breaking in, like as this market is going up, and the mini swing break in and reject, you can take your trade, and if you take your trade, if mini swings start rejecting, take your trade and you place your stop loss above here or above here. But if your mini swing have not started changing, this price is not likely going to reverse. For you to know when your uptrend or downtrend is weak, now just like this area, this Ethereum on the 1 day, this Ethereum on the 1 day. Once this Ethereum start approaching the support area, you should know that the price is expected to react. And when this breakout happens, it means that this downtrend is weak already. So those are the areas you know you're a weak trend or not. So breakout when is at the support, or if this market starts forming a pattern, if a reversal pattern start forming. So the three things: the support, the breakout of the trend line, then if it's at the support or resistance, if it's an uptrend or downtrend, then if it's at if a pattern starts forming. So that's how you know if a market if a trend is weak. So more questions and we would close our class for today. So if that should be all, um ending my live stream for today. So see you guys tomorrow. I'll be doing more of my analysis live, and by as time goes on, you would know how to trade this cycle. It's actually quite, because you've been reading something very different from this. So trying to make this a part of yours now, it's gonna be a little difficult. So, but don't actually feed out. Try to take it slow by step, slow and steady. First, knowing how to draw your cycle, knowing how to use this parallel channel to draw your trend, knowing your chart patterns, and this will take you, will give you a very long ride on this market place. So, if that should be all, this is the end of my class for today. So, thank you all for joining. Remember, you can watch the video even after the class, and hoping to see you guys tomorrow.